Welcome back. You're still tuned into Trading Hour. There's no respite for the market yet. It is 130 points lower on the Nifty, 0.7% gone. So pretty much at the day's low over there. The mid-cap index is also, seeing pretty sharp cuts right now, 0.9% lower there. And the Nifty bank is faring a tad better, but, a lot of the banks like IndusInd are now under pressure after opening well in the green. So that's what's going on with the frontline indices. What's holding up are some of the pharma names, so those ones doing good. Some of the auto names have seen a recovery from the low, so whether it's Aisha, Hero, Maruti, all of these pretty much at the high point of the day. So that's what's going on with the markets. But let's talk about, where the markets are headed this year and what sectors could really do well. Sunny Agarwal of SBI Securities joins us now to discuss exactly that. Sunny, good morning and thanks for joining us. This is Pavitra and Happy New Year to you and your team. The first question I just want to begin by asking you is about where you see the market headed now. Yes, we did outperform significantly last year. Is this something that you expect can continue going forward as well into 2023?
Yeah. Good morning, Pavitra, and Happy New Year to you, entire team of CNBC. So, in terms of market outlook, so we would not like to hazard a guess where Nifty is heading in 2023. But as of now, the Nifty is trading at 1 year forward PE of 19, and what we feel is that 2023 is the year where you need to find an opportunity in a bottoms-up opportunity in a small cap space. So the companies which are going to post a very good earning growth in a small cap. So we may see a repeat of 2017 where we have seen a handsome rally in small cap companies which has posted a very good number. A case in point, companies where the capacity is expanding at a rapid pace, like CCL product, or for that matter, Safari Industries, where we have seen that capacity is going to double in next 2 years in CCL. In Safari, their new plant has just gone on stream. Or for that matter, a select opportunity in like auto and auto ancillary. So in auto ancillary, companies like Lumax Industries, which is going to be one of the key beneficiary of increase in content per vehicle as far as lighting segment is concerned. Or for that matter, companies like Sharda Motors, which is one of the key beneficiary of changes in emission regulation, which is going to get implemented in the month of April. So you need to dig deeper into the as far as market is concerned. So there may be a lot of money making opportunity in a small cap, again, which are one of the leaders in their respective segment. And there we find a very good money making opportunity. As far as broader market is concerned, we feel market will consolidate in a band. And again, within that, maybe a sector like, again, it's a consensus buy as of now, banking. So banking, everyone knows that the credit growth is going to be healthy over next 4 to 6 quarters. So maybe next 2 quarters, NIM will sustain and post that NIM may come under pressure. So within banking, a mid-cap bank like Federal Bank, IDFC First, where we may see a relatively rapid growth in earning as compared to their large cap peers. So there we may there lies the money making opportunity.
Yeah, just wanted to also talk a little bit, since you spoke about how these mid-cap sectors are doing well. One theme that's playing out is the whole home improvement theme. Once again, it's coming back into action, whether it's Kajaria Ceramics, which is up 3% right now. APL, Apollo Tubes, is doing pretty well. And then, of course, you have the real estate guys. In this entire space, what are the stocks that you like for the long term?
So for long term, we would like to stick to the market leaders like Century Ply in the plywood segment, or for that matter, Kajaria within the tiles segment. So as of now, what we have seen is that commentary from the real estate player continues to remain healthy in terms of growth outlook. So we feel that, on the other hand, raw material prices have a little bit softened. So on one hand, the demand continues to remain robust, and on the other hand, the margin pressure is coming off. And what we have seen is that recently there has been a cut in the prices, gas prices by Gujarat Gas in the Morbi sector also. So definitely players like Kajaria, where the feedstock is gas, is going to be one of the key beneficiaries. So in long term, definitely we would like to stick with the market leaders like Century Ply and Kajaria.
Sunny, did you have a look at Radiant Cash Management? That was the new kid on the block. It debuted on Dalal Street. The subscription was very poor, just 53%. Then it sailed through because the company lowered the overall offer for sale, or the overall size of the IPO. But still, they had to, price the issue at 94 rupees, which is at the lower end of their price band of 94 to 99, and the price at which they had allocated to anchor investors as well. But after doing all that, today there is a pretty good response on this Dalal Street. The stock is up, 16%, 109 rupees. Is this a stock that you look at? And what about compared to peers like CMS Info?
Yeah, so again, Radiant Cash, the business continues to remain a very good. So in terms of all the financial metrics, if I look at a metric, so whether it is a return ratio or cash flow, so everything continues to remain the healthy. Only the concern which the street has on this company during the IPO was that how is the growth that is going to shape up in this industry? So growth is something a concern. I mean, one of the aspects is that with the increase in online transaction or UPI transaction, maybe the requirement of refilling the ATMs or shifting cash from one ATM to another, that may reduce. So there is a concern on growth, and that is the reason that we have seen that the response during the IPO was kindly tepid. Maybe going forward, as we start to see a growth number from the company, the valuation will definitely, I mean, try to catch up based on the earnings going forward.
All right, that is on Radiant Cash. Sunny, do you look at any of these new age tech companies? I mean, of course, they've corrected a lot in price. So at these levels, do you think you'd be comfortable taking a bet on any of them at all?
I mean, definitely these are the good franchises, and they have built a very robust business model. And anyway, companies like Zomato and Paytm, they have guided that over next 4 to 8 quarters, definitely the profit is going to start reflecting in the P&L balance sheet. We would like to follow wait and watch approach as far as Zomato or Paytm or new age companies is concerned. And once we see signs of profit picking up, then probably we would like to take a bet. Definitely, few of these companies will can be a multi-bagger over the period of 5 to 10 years, because anyway the sector has been consolidated. There are few players who are going to enjoy the expansion in the industry. So, but at the same time, the street would love to see the profit from this company. Then probably we will see valuation start. The street will start assigning a higher valuation multiple.
All right, we will let you go on that note. Thanks a lot for joining in and speaking to us about a variety of sectors, stocks, and the way forward for the market. We'll step into a quick break. When we come back, we'll get you a deep dive on everything you need to know about securitization. This is part of our special series, Fin Street. Stay tuned.